Day Trading Radio presents a Briguy trading production.
Today is
Thursday.
You know what that means. We're gonna have a special guest. So get out the broom, sweep the place clean, and dust off the mat so the welcome can be seen. Roll out the carpet, strike up the band, and give out with a hip hooray.
Hip hooray!
Wiggle your ears like the musketeers. We're gonna present our guest today, 'cause today is guest our day.
All right, good evening, traders out there. This is Briguy on daytradingradio.com and bringing to you an after-hours show that's been hyped as one of the better shows of the year. And it's my pleasure to introduce you to one of our futures traders, and no doubt trading other things as well. And this would be Mr. Madman. Welcome, Madman.
Hey, how are you guys doing?
All right, so if you guys in the chat room would be so kind as to just confirm that you're able to hear him over the airwaves, that would be wonderful. Appreciate that. And we'll do our best to share out his screen as well. And you are broadcasting right now,
Okay.
Madman. So if you see that
All right.
on
Yeah.
the screen. And you are broadcasting right now.
All right.
Madman, so if you see
So
that
pretty good day as far as.
on the screen.
Let me just mute the chat. So it was a pretty good day, like in our futures chat room. We pretty much nailed the top and the bottom, and so right now I see that the futures are still sinking, and that's what we expected for this. And let me just adjust the screen a little bit so you guys can see a little bit better. We'll have to make this a little bit quick. You know, we lost a lot of time, trying to fix the audio on my side, and that's, pretty much my fault.
That's all right. We'll be happy to have you on another time if that's good with you. And
yeah, I
we'll
just
be a little
wanted
better
to cover the
prepared.
basics because the market's moving pretty hard either way, and this is one of the charts. Let me know, like, if you guys can see the chart really good. I'm going to enlarge this chart. This is the main chart for this S&P. I use the SPY for this, and just to get a good view on what the markets are doing. And this is a chart that we generally share in the futures room. It's got all the major levels that we have on top. And we already posted in the futures chat room. So if anybody needs the chart, just drop by tomorrow and we'll post it again.
Okay.
So this is the February high, and as you can see, this one right here, the line over here is the resistance for February. You see that we traded 2 days, 2 candles that were up over here. One of the candles was right at the top, and then the next day you get a very hard reversal that takes out this is a very key thing to note when you're reading candlesticks. This one red big candle took out 1, 2, 3, 4, 5, 6 candles in just one day. Okay, so that's a very powerful signal, and it kept on going down, and they just brought the market back up, and then look at the sell-off after that. The next candle took out almost the entire February. It went all the way back into January. It traded all the way back to January 22nd, or 23rd, I should say.
Yes. So,
and then we started going back up, and this was something that we talked in the futures chat room, that this big candle, is very powerful candle, it's going to dictate pretty much. I would go as far as saying that, it's going to dictate pretty much the first half of the March too. It'll be very hard to take out this candle. Over time, you would be able to take it out, but this is a very, very powerful signal. And yesterday and today when the market was going up, you have to be on guard when you see something like this. And today it made the exact top. We didn't know that it was the top. The market was still in full flow. And that's when I'll show you something that happened right there. See if I can find it. Let's go to the 5-minute.
What's the platform that you're looking at now?
This one is the Schwab Street Smart Edge, or
Okay.
yeah. The problem with this is, like it doesn't resize it correctly, like so. What I'm going to do is I'm just going to take you to just use the free charts for right now.
Okay.
Yeah, because it shows the same thing,
Sure.
And this is like a lot of our in our regular chat room and in our futures chat room. There's people who have smaller accounts and all that kind of stuff, If you can't make, like we talked about this in the past shows, like if you can't make money with a small account, you can't make money with a big account, so that's something to remember, So even if you are starting small, today was a really, really nice day, like to take at least one swing, or swing for the fences,
Mm-hmm.
And this was the top right here, as you can see, like it was pretty much at top of the Bollinger Band. Your stochastics are, like totally sold off, totally overbought. And then you get a big candle, and like with candlesticks, if something is true on 5 minutes, it'll be true on 1 hour, it'll be true on daily, it'll be true on weekly. Monthly is too long a time frame, to worry about that.
Okay.
And look at this candle we made off at the right at the top. Had this candle been like a small candle and then like drifted around or whatever, this could have like been, like you could have ignored this candle, like it was made at the top. And look at the selling on this candle. If you look at the volume, like it was pretty much like one of the heavier volumes in the morning.
Above
Since
average.
morning, yeah. Yeah, but that was the beginning, right? Because they are not going to show their hand at that time,
Mm-hmm.
The volume picks up right at the end of the day, That's the biggest candle so far. And even yesterday's move, like at the close, that was like that people are not willing to hold it overnight, That's one very key thing that we talk in the futures room, like anytime people are not willing to hold overnight, better be watchful, So this candle took out, this entire, these like 5 or 6 candles. And after that, then you get a green candle, and that's what we say, like you have to watch for the follow through of the green candles to see what the down move is going to be, Same thing on the, when we are going up, you get these red candles, but they're immediately taken out, So it keeps on going up, it keeps on taking out these red candles, like over here. The small ones, like it takes it out right away, And then it goes up and it takes it out right away, right? It's doing that. When it makes a green candle over here, it just drifts sideways, When it drifts sideways, that means, like either people are getting out, and the whatever the buying pressure is, it's all being absorbed by the selling pressure, That's why it can't move up from there. That's the only thing, that candlesticks are basically just reading the price action, Like the red candlesticks tell you that selling is more powerful than the buying, and the green candles tell you that the buying is more powerful. And this was a key level in the futures, like around 1850 or so when it first bounced, and it just drifted up, like into 1950 or so, and it never really like took off, like it should have gone like all the way up to like 22 or so that we were talking about in the futures room,
Mm-hmm.
And it just drifted up. And the red candle, if you miss this short like right here, you can easily take the first red candle, and put a stop right above the red candle. And then after that, of course, like you get selling right into the close, like, and this was something that we talked about in the morning, like this was even when the move was right up till here, We said that watch for the candle at the end of the day that people won't be ready to hold overnight, like whether it's a sequester coming up or, like whenever there's uncertainty, people are not willing to hold overnight, And they just, pump this thing all the way to the very top, like because the volume was very light, the last few days. So they pump it all the way back to the top and, then drop it from there, So now, like, this is what happened in the past, right? And as far as, like, you have to be watchful on the Bollinger Bands too. Like, don't be buying at the top of the Bollinger Band. Like even though this thing closed at the top, look what happened the next day. It went right to the bottom of the Bollinger Band on the other side.
Mm-hmm.
And even though like we are in an uptrend, and in the futures room we talked that if 1490 gets taken out, watch for the down move. And it's a good thing that it came back up, like because this will actually set up really nice shorts, like if we get a follow through day tomorrow. And so far the futures are going down, so seems like tomorrow might be a decent down day. And now the key thing remains that do we take out the low like around 150 again? If you take out the low on SPY at 150 again, then you probably might be have like really big targets over here that like you could take out, go for the gap fill in the at the beginning of the year too.
Mm-hmm.
And again, like like people who set up their shorts right at the end of like maybe an hour from the end of the day. This is like if you knew what you were looking for, that's what you would be looking for. Like I cleaned out all my longs and I only have shorts left in my account. Like so we'll see what happens. Like I mean one day doesn't make, but this is like the trend that you see. Like I mean if you're watching candlesticks, like this is something that you see that a big candle takes out like 4 or 5 6 days, and then it tries to go back up, and then you get a really big smackdown. That was like 35 points in the ES, like. And if you go back, I don't think like you can find a candle that has like 30 points on ES for like 6 months.
Mm-hmm.
So you have to pay attention to something like that.
So how much of that stochastics here getting to an oversold level is going to affect you wanting to short at this point?
Not much. Like I mean I don't pay too much attention to the stochastics. Like because they can stay like if you go back, like January 5 or 6, they were overbought at that point, like, and they've been overbought ever since,
Mm-hmm.
right? And they didn't ever go into oversold. And one really like thing that I want to talk about is, like once you have a determined uptrend, right?
Mm-hmm.
Like we have right now, I would say that like it's good thing that we nailed the top today, and we have problems with the trend itself right now, But if you wanted to trade with the trend, the last two moves were really good, like we are going back to the hourly chart, and I talked about this in the last show that like the pivots need to be broken, like for the trend to break, and I think that's what we did when we broke 1490. This is the daily chart, and by pivots I mean like the troughs and the peaks. Like in a downtrend, if the peak breaks, then you better be watchful that the trend might be coming to an end. And like on this, if the troughs break, then the uptrend might be in danger. And like if you see, like we never broke the troughs, like whatever little correction we were getting in January, we never broke that, And in February we have this little candle, like it's February 4th. And this was the key level that we were watching, like if it takes out this candle, because it goes back almost a month, and if it takes out this, and this was decent support, like it took it out very convincingly, like it was big volume day over here. Then it did reverse and come back up, and now it's selling off, and that's something to be watchful of, like I mean the easy money has been made, and now you got to be a stock picker, like on short side and long side both.
Mm-hmm.
Earlier it was okay, in the morning you come, you put on a long, and you just wait till the end of the day, and like you cash it out. Next morning you come and repeat.
Mm-hmm.
And even if you got caught, like you had a little bit of a loss, like a couple of days later it'll be profitable again, like so. So this is something that I always watch, that a pivot should never be broken, like if you go back to January, like I mean the pivot never broke until we like had a decent down move, and then once we broke the pivot over here, like from November, once we broke that, and then we went down, and the up move came pretty violently,
Right.
Yeah. And so like we were saying, like if this was like before the pivot broke, like I mean, if you wanted to, like you could have had like decent up days in the, even with the correction, like how to get in with the, like the hourly came straight down to the 200 moving average, and then it picked up again, and then if you were aware, like that big gap that we got, like I think it was last Monday or Tuesday that we got, and that was a perfectly shortable thing. It was again at it opened at 22, went up to like 24, and then from 24 it just sold off for the next 2 days. And then when it came down over here, like it, it doesn't show that really. So on this, it doesn't show the hourly candles don't start. They start on the hour, and but if you go and start your candles at 9:30, like from 9:30 to 10:30,
Okay.
you can see that this candle, was actually green. This was the first green candle. Like if you look on the hourly, let me just give me 1 second.
Okay. You're listening to Briguy on daytradingradio.com with special guest Madman as we take a look at using candlesticks to determine direction and price levels, and something that you can apply not only to the futures as we're discussing, but really to any of the equities you might be following for day trades.
So this is actually a better chart, like I didn't want to log on in front of everybody,
Yeah, no problem. I could have closed it down. If you tell me next time, I'll do
No,
that.
that's okay. I wasn't sure if I was going to show the password or not, like so. Anyways, this is a much better chart because this you can configure it any ways you want, like so. If you like you were asking about the stochastics, if you look, like these are like once you like like people have been trying to short this thing forever,
Right.
But once you got this down move, like and you knew what you were looking for, and went back up, like this was the tag of the hourly 200 right here at the bottom.
I don't see your mouse moving around. Where are you pointing?
I think it's lagging a little.
We're looking at chart number 1. Okay, I see you there now. So why don't you just describe which candle you're looking at, because the mouse isn't coming through.
Okay, it's a big green candle right here.
Okay, maybe if I point at it, it might show up.
Yeah.
Oh, of course, I think I have control over your mouse, so I don't want to mess you up there. But anyway, it's the one there in the center, the large green candle in the center.
So it's this one big green candle, like I mean, like we said, like the candlesticks work on every single chart, like barring the monthly, because like I don't think anybody trades the monthly. Even the weekly, like people pay attention, like hedge funds and all that kind of stuff,
Right.
But like nobody goes to the month. Like monthly is good to pay attention to if something major is happening, but like daily and weekly are pretty good. Hourly is good too. So if you like paid attention to this candle, like, and I'll tell you another. You'll find nowhere in the books that once you find a reversal candle, and if the next candle is the opposite color, you can safely go long with a stop underneath the previous green candle or the red candle,
Right.
So in this case, like this is a big green candle, so the next candle is red. You can go long, and I'll show you this thing on like any number of charts, that you want to see, Once you get the reversal, and then the next one test it down, like so you just go long, and like you could catch all the move up to the gap opening. And the gap opening, we knew that coming from such a big sell-off, like it was going to be sold, and of course it did sell off like for 30-40 points, whatever. And then this was the candle that I was talking about, the reversal, if you look at the reversal. And we called it out in the futures room, and almost to the right to the bottom, like it was around 84 or so. And then after hours, futures went to like 81 and the low was 81, but the candle formed at around 84. So you could have entered at like 84, put a stop underneath 81, and we didn't really expect such big up move, like otherwise, like everybody would have ridden for like 30, 40 points.
Right.
Yeah, so, but it did chop around over there, and this is the thing that I'm talking about, like, I mean, most people are going to say, like, where do you see the red candle? Like, the red candle comes in, like, as a doji after about 3 candles,
Okay.
right? So that low will almost always hold, like, once you get a trend change.
Right.
If it doesn't hold, then it's not a trend change and you need to get out, But look at your risk-reward ratio,
Okay. So let's just summarize a couple points that you just made. You have the dojis, actually like a pair of them happening, and I don't see any days on your charts, but it looks like this was from Monday or Tuesday. Today's Thursday, Wednesday, Tuesday. So that's like Tuesday.
Yeah.
So
Yeah.
at that point, you're taking a peek at the prior dip there, which is covered up, but still the dip from, let's see, Thursday, Wednesday, from last Thursday, the middle of the day, at
you're saying
149.98. Are you looking at that price level?
Yeah.
You just covered it up, but yeah, the 149.98. So those dojis are coming in right around that 149.98 level.
Yeah.
So you're taking a peek back there and deciding either to stay in the long.
Yeah.
You're not taking a new position at that point, right?
No, you are going to reverse all your positions and you're going to get out of your shorts and start initiating longs. We'll go over the longs that I initiated. Almost every single one of them worked. And they worked like really, really beautifully.
So why would you take a long once you crossed over 149.98?
Because that this move this is reversing right here.
And where's
this
here?
Would all like your trend.
Yes.
Let me draw.
I could see when you hold the. It looks like when you click the mouse, it seems to change.
Okay.
And we could see it. So.
Okay, this candle is a reversal, right? I mean, it's the first candle that you're getting after like 6 or almost 8 candles that you're getting.
Right.
A first green candle, you're getting that there's some buying coming in, right? Up until that point, like it's only been selling, and your stochastics are oversold. Everything points to an upside, right?
Okay.
And then again, we go back to the same thing, had it been like chopped sideways, I would never go long if it chopped sideways,
Mm-hmm.
Right? That's what we just covered, right? I mean, that's what happened today. Like, even when it had a chance to go up after the sell-off, the initial sell-off, it had a chance to go back up, but it didn't go back up. Instead, it fiddled sideways, and then the big move came down, right? So the market gets like in one day you get a 35 point move down, and then you start moving back up. The only thing is we didn't expect this up move, like the up move went almost all the way back, right?
Right.
So like even I didn't expect this up move, but I still had a lot of longs in my that I got out today, I started scaling back on longs right in the morning, since morning I've been scaling out of longs, and looks like I got out of JP Morgan right at the top, I'll show you this, It was trading outside the Bollinger Band. That's the only way that I use these Bollinger Bands and stochastics and things like that, is if they confirm something that I'm seeing otherwise,
Mm-hmm.
And JP Morgan had their conference or something on that day, and it just kept on selling and selling and selling. Initially, I bought it around like 47.30 or something.
Okay.
They kept on selling and selling, it's a very strong, like if you look at the daily chart, it's very strong on the daily chart, I just use like simple charts, I just a couple of moving averages and that's it,
Okay.
And it kept on selling and selling, and I was expecting it to come down to the 50 moving average,
Right.
But once I saw that what the futures were doing, and once I saw the reversal in the futures, like I said, I have to get into this, and I got in like just under 47, and my average was around like 47.15 or something,
Mm-hmm.
And look at the move on this thing, like from 47, it's gone all the way to like 49.50 or whatever, like, and I honestly, I didn't expect, like this morning when it was coming down, I was scaling out.
Okay.
And just before like the disaster happened, like I got out like 49.50 or something like that,
Nice.
And from 49.50, it's down to like 49. It didn't sell off as much as like Goldman Sachs. That was the other one that I had long.
Mm-hmm.
And that didn't move because here's another example, like where two stocks in the same sector, like I mean I was long this one too,
Mm-hmm.
and look what happened, like yesterday it came down all the way like at the open,
Mm-hmm.
and then it went back up, and I had traded this before, like on this on the previous down move.
Mm-hmm.
I sold it around like 54 or 55, like that gap up day.
Right.
And from 155 it went down all the way to like 146 or 147, like, and that's like a disaster, like, and people who are holding from that time, they never got a chance to get out,
Right.
And look at this one, it never went back up to the same level, that JP Morgan did.
Right.
Like, I mean, that's something that needs to be, like, that you need to look at, like when when it sold off, like JP Morgan sold off like 1%,
Mm-hmm.
and this thing sold off like almost $2.50, like so.
Now, we had a question in the room from one of our viewers, Dr. Gass, and he was just asking if you wouldn't mind saying how long you tend to hold your positions. Now, you kind of mentioned it here for these two trades, but how about for futures contracts? What do you have on average that you're holding on?
I started off as like one for my futures, like I have a day trading account and a swing account. I started with one swing, and now it's doing pretty good, and I'm thinking about doing like four.
Okay.
So it started off last year, and I've traded the spiders for a long time, like, and then last year I made the switch to futures.
Mm-hmm.
And so, like the other thing for futures is, like if you put on like any market, like whenever we are rallying, there's always some sectors that are always leading. This time it was the banks, the railroads and the transports,
Mm-hmm.
So if you look at these, like FedEx, I just look at the main leaders in each sector, FedEx, like these are the ones that you want to be in, and these are the first ones to get the reversal, first ones to take off, and the first ones to get the major moves,
Right.
And I'll, like in a couple of minutes, like I'll show you like another short that I'm stocking right now,
Okay.
and so this is something, like, I mean, look at the moves and all these, like once they go down and, they snap right back up, and eventually you will get like profit taking and things like that. And UNP is another one, and Norfolk Southern is another one. If you look at these hourly charts, like they all had like reversal candles that gave you like really low risk entries, and once your reversals are working, you know that you pretty much nailed the bottom, and same thing with the top. Like if it's coming down from here, if you initiated these shorts, the shorts are working pretty good. And that's why it pays to pay attention to the futures, like critical levels and things like that,
Mm-hmm.
And this is PetSmart or PetSmart. That's another one, that this is for a retirement account that I bought like that couple of days ago.
Okay.
From 62, it's all the way up to 65. This is like, one of those like major funds have this,
Okay.
like it's in the spiders 500, S&P 500. So like, I mean, I'm saying like, like if you look at the daily, like it never gives you a really good entry, like, I mean, it just keeps going up and up and up, and you get these big candles down, and like you want to enter this trade, but you're really scared, and like if you look on these, like you get these two pretty decent dojis at the bottom, one of them is green, and you don't know what's going to happen. I thought I'd be stopped out on this, but it's worked out. And if you're doing a futures trade or anything based on the, this is just to to see where you are, how far you're going, these last 2 days or 2.5 days, we should say, when you were going up, there was no need to fight this.
Mm-hmm.
If you fought, you pretty much lost, and that's what I tell in the futures room. The first up day, never short, it doesn't matter. We short, cause, whatever the opportunity comes,
Right.
But if you short on the very first trend change day, if tomorrow is a sell-off, do not go long, you will pretty much be wrong, and, you'd be fighting, and the bigger, the rotations, we call them in the futures,
Right.
the rotations will always be bigger on the side that's the first day of trading, whichever way you're going.
Now, how do you find your stock picks, like PetSmart, for example? What made you look at that in the last few days?
I've just been stalking these, I have my stock list right here. I don't know if you guys can see it. I'll bring it to the front.
It'll take a moment to show up down there, but it should be there.
Yeah.
So you've got the major ones that we talk about quite a bit, and
yeah,
have the high volume, the high ATRs, et cetera, et cetera.
Yeah, I've traded pretty much every single stock on this list, so I know how they behave.
Right.
I know, if deer, gaps down on their earnings, never to short it, because they just take it right back up, I'll show you, back in, right here. This was, this is the monthly I'm looking at. Back in sometime over here, there's a candle right here around 63 or so. It doesn't go back that far. Around 63 or something, there's a candle over there. It gapped down, and we were chatting about this, that deer gap down. I said buy, because I know this stock, it always goes up, doesn't matter, because a lot of these are the old the old NYSE stocks, so how they behave,
I see.
They'll take it right back up, and of course by the end of the day it was up like $2.50, $60 stock, that was up $2,
Now I'm looking at Deere for their last earnings back on February 13th. Looks like they took a pretty big hit.
Yeah, again, you want to see something crazy, anytime you see these red candle highs, I'm going to put my cursor over here.
Mm-hmm.
Anytime you see these red candle highs on an extended move, that's the only reason I have this pink 5 EMA, Anytime you see these red candle highs, get out,
Mm-hmm. Okay.
If you look at Apple, 701 was the high, and there's a red candle right there.
Yeah.
See that? Red candle highs are, that. That's just telling you that, they try to gap the stock open higher, and people sold off because, people don't want to hold it overnight,
Yeah.
And of course, we didn't know that Apple was going to be, cut into half. So,
Yeah, they try to be Google, but they're not.
No, they're not. They're just a stubborn old tech company. And we talked about this about 6 or 7 months ago after I saw that red candle high, and we had a pretty big argument in in our futures room that I said they're going to be like REM, but not as bad, Because, REM is a one-trick pony, right? So Apple has a few more tricks, before it goes down.
Right.
But at that time, Apple was like 600 something, and people were saying to buy it at that time. And, we went long on the earnings around 610. There was a couple of people in the room.
Mm-hmm.
And the moment it gapped down, I knew I was in trouble. And why did I go long, So it was like that was a risky trade, like it came back up to like 611 or 612, like I sold it without thinking, that I could make money on this, it was just giving me my money back, like it didn't go down much, at that time, it went to
Yeah.
like 593 or something.
No,
And
sometimes if you're in a trade and you realize that you were wrong about it, it's just best to get out and reset.
yeah.
So if you can break even on it, it's even better.
Yeah, and I don't know like if we talked about this last time or not, but these are like candlestick trades, and they will happen again and again,
Mm-hmm.
If you go back, like this was something that we traded very successfully, like it's I'll just wait for this to
Sure.
update.
It's the
So
daily
again,
SPY.
like yeah. So again, like in September, you see that there's a pretty decent down move, and then in October we tried to and we failed to make the new high,
Okay. If you're watching this, the vertical bars are separated by months. So you've got September on the left, and then
Yeah.
October, November.
Yeah. So again, like once you get this doji over here, this was our first trade, that we traded pretty successfully, like I had puts on this and everything, like I didn't hold them long enough. I just held them to the 50, and like I'll show you another chart, because this was the day that the Qs failed the 50, this cursor right here. This was the day that the Qs failed the 50.
Okay.
And I'll show you what I mean by the 50. This is the spiders failing the 50, on November 2nd,
Yeah.
So once it opens underneath the 50, like go short right at the open and go all in, like that's what I say, like have a risk in mind,
Right.
and I mean, I'm not saying like go all in and blow up your account,
Madman
But
said to
if
go
it-
all in, guys. Go all in.
yeah, yeah. But this was a very, very good trade for us, And I'll show you another thing that I always look for, When you start selling like this and people are wanting a reversal, and once you go underneath the 200, you just need a reversal candle, and you can stay long after that,
Mm-hmm.
Again, like same thing that we talked, that the candle should be taken out, Look at the first time you print a green candle at the 200, it's just underneath the 200 right there.
Yes.
But that candle has a tail on top, it never gets taken out. So I started nibbling around at the bottom of this candle, once we started printing underneath the candle,
Uh-huh.
I started going long, and once this candle right here printed, I knew I was safe, like that was the bottom of that candle, and this gap up. After this gap up, the bottom of that candle was my stop,
Now, what is this? This is a daily? It doesn't look like a
Yeah.
daily.
This is your daily.
Okay.
And the light blue line is the 200, like, and you can buy over there for, like for your longer term portfolios, that you're looking at. So I'm still long in my retirement account, the SSO, I bought that. So I'm still long on that, like, and that's turning out to be good, like that's a benefit of having like different accounts, like some are longer term, some are short term,
Mm-hmm.
and I should have probably taken it out, like today, but I never try to time it like that, as long as this trend stays. If tomorrow's a down day, then probably I'll start trimming that too.
Mm-hmm.
And that was the, like, like we talked about, like if candles are good on, like one time frame, and they're the same, like for everything. And if you go back to like September, October, this was the day that I said that the Qs failed, like the Qs opened right at the 50,
Mm-hmm.
and I told in DTRs, if you go and check the chat logs, like I warned everybody, I said the Qs are opening right at the 50 and it's going to fail that, and look at the failure, like for Qs there was a pretty big move, and the whole market went with that,
I think they did that again this past Monday, didn't they? The composite did anyway. I'm sure the Qs did as well.
Failed the 50?
Yeah, I'm looking at it now. It's actually, it closed above the 50, but it did pierce the 50
Yeah.
on
But
what is this? This would be Tuesday.
yeah, but this one is a little bit different, that it opens right underneath the 50,
Yes, the one from
Yeah,
last
yeah. Look, yeah,
October.
they did it on the 26th too. I wasn't paying too much attention to the cues, Like look at this one, You're right on that. This day right here, but you're coming off a very sharp sell-off, like from the highs to the lows,
Yeah. Now you have, let me see, you have an SMA, and I have an SMA. So why are you looking at Qs? Let me make sure my Qs are the same here. Yeah, Qs definitely closed right
Yeah.
up. Actually traded below the 50.
Yeah.
Right,
I
okay.
mean, it hit the 50 and then it failed, and like then it went down and all that kind of stuff,
So why wouldn't you draw the same conclusion there that it's going to continue down? Is it because
You
it
have to
was a
see.
hammer candle,
You have to
or?
see. No, it's the context, like you're coming from a high. It's very hard to fail something when you're dropping that much that fast,
Okay.
You look at the previous like a month, or you can go back, like I mean, let's go back to like December, How many moves do you see that are actually like from high to, let's say it made the low 66 and about $2 move on the Qs, like I mean, it pretty much trades a whole month without even making a $2 move,
Right.
right? So I mean, you got to go with the range, like I mean, that's the reversion to the mean, especially for the indices, and if you looked at the spiders, like that's in an uptrend, right? So more people are willing to take the first correction, like whatever first correction is, like when it dropped on the, if you go back on the spiders, any correction, that like it just drifted up. That's the reason that the first time, like when it dropped, it went right back up, very hard, right? And second time it dropped off, it went right back up, And now the third time, if it takes out these lows, that's a big problem for everybody,
Right.
right? Because anybody who got long going back like to middle of January,
Right.
everybody's caught right in this, like so that like you have to think in context, like even the spiders trading range, has been like really really small,
Mm-hmm.
right? So I got to run in like maybe 5 minutes, to pick up my kid.
Okay.
And we can probably continue the show if you want. Like I can be back in like probably 15 minutes, 20 minutes,
Okay. Well, you know what? I think it would be good if we leave a little bit on the table and
Okay.
get the viewers to come back on another show.
Yeah, I can answer the questions, like like if people are having questions.
Yeah. If you
Because
guys have any, I
there
didn't
was a
see
lot to
any.
cover, and like I still have a couple of notes,
Yep.
And there was something that somebody asked about the Fibonacci, like I never use Fibonacci.
Mm-hmm.
But again, like if you're using Fibonacci, like we can go back and or put Fibonacci on here, like, and my problem with Fibonacci is, that how do you know something's going to happen before it happens, right? Here's the Fibonacci on this move, like it went to the 50%, like, and how do you know that you're going to reverse right here,
Yeah.
unless it starts to reverse? How far is the bounce going to be, like, I mean, if you put the Fibonacci right here, right, it goes beyond the 618, like it went like 100% on this up move, right?
Well,
From the time
you'd
that
have to put it.
like right here,
Well, you're doing it from the last week, basically, right? The peak.
Yeah.
The
Or
peak from a week ago to this low.
Yeah.
And then you would you'd look at the lines like you would pivot areas. You'd see them as resistance or support.
Yeah. The only thing I can say is, like use Fibonacci with conjunction with the candlesticks, and that probably makes better sense. Like if you were to make a Fibonacci retracement on this move, and you see that it went through the 50, but it's reversing right here,
Uh-huh.
So if you were looking at the Fibonacci, you know that it's a 50% move,
I
and
think
then
you'd have to, though, because you're looking at that gap there, a true Fibonacci, I think you'd have to put back on the previous candle, the one that
Oh,
dropped below 140.
yeah, even this one, it worked pretty good. Like it went to the 618 the first time,
Mm-hmm.
and then it bounced, and then the second time came to the 50%. The only thing is it went a little bit below the 50%, and some people might be, like stopped out or for whatever reason.
Yeah.
It went down like for like 2 points below the Fibonacci. But that's something to look forward to. Like that. If you pay attention to the candlesticks, you get like sometimes I see, like people taking longs, and there's a red candlestick right there.
Mm-hmm.
Then you wonder, like, why are you doing that?
Did you drop the phone?
No, I didn't.
Okay. The microphone got a little scratchy there.
Okay.
Yeah, well, listen, man, I think this is some really good information. You brought up a lot of things that, like you said, we've been talking about in the futures chat room, and it's also some of the things that I've talked about on my shows. In fact, even Tuesday night, we talked about some of these things on the show, and we appreciate you taking the time to share it with us today.
Yeah. Sure. And if you got questions, and we generally share the charts in our futures room, like especially that big spiders chart that I showed you.
Mm-hmm.
We share those, and that has all the levels, like, because you never know when a flash crash or a major market move might happen, like, and then you don't want to be doing your homework at that time, like just look at the chart,
Right.
and the chart shows you everything,
And just another caution to the viewers out there is don't think that you can open up a futures account and just start shadowing the folks in the room, because you'll run into some trouble. You may end up with some good trades, but you could very easily miss some trades, and then you'll be disappointed, and then you'll feel like you start blaming other people for your trading, and we don't want to see something like that. Know why you're getting into a trade, have a plan. And Madman talked about a lot of things tonight, but you can hear in the comments about his having a plan, his knowing the levels before he's getting into the trades, knows where his targets are, peeling things off, doing his ads. There's a lot to digest from just a few minutes that we've had together here, Madman. I thank you for coming on.
Yeah, and I always say, like, the best quote is, like, you can, like, if you give somebody a fish, you can feed him for a day. If you teach him how to fish, you can, you got him food for life,
Absolutely.
That's the same thing. Like, it's better to learn the methodology rather than to just follow the trades, like, because you want to be trading on your own, like not copying somebody,
Right, absolutely. And then you could apply those methods to other things that you're trading as well.
Yeah.
So if I don't see any other questions in the room, and yep, sounds like Madman doesn't trade off at 2 ticks. Probably looking for a little more than that, right?
2 ticks is too little, like that's the futures room, like they always say thank you for the tick, like, because I when I enter, I always give a tick, like on the entry, on the exit, like I don't care. So
yeah, well, there's different trading styles, so it'll work however for everybody.
Yeah. All right,
so we'll see you around the room. If we don't see you later tonight, we'll see you tomorrow.
Sure, thank you very much.
All right, you're very welcome.
Bye.
Bye-bye. So that is Madman, and we appreciate him taking the time to come on tonight and sharing with us his tips there on his trading style and how he uses candlesticks to set up his trades. I think that's some valuable information there, and I'll tell you, it's the kind of thing that you have to do in your homework. You do that ahead of time, and all you need, first of all, you've heard me emphasize this plenty of times, understand your platform. But at the same time, it doesn't mean that you need to become a wizard with your software and have it all marked up, all colorful, tabbed and tagged and labeled, etc., etc. Have a piece of paper, have a notebook, one of those simple yellow pads, white lined ledger books, whatever it is, and just mark down the overnight high, the overnight low. Mark down some prior areas of support, prior areas of resistance. And at a minimum, come in the show, come in the chat room early enough, and we got some excellent traders that are giving you that information. Mark them down, have them with you, and then when you're taking your trades, take them with some confidence, knowing that you're either well away from these areas or that you're getting out of your trades as those areas come into effect. And if you're not the kind of trader who can put on 10, 20, 30 contracts at a time and pull out of trades and leave some on the table, and you're just doing one or two, then don't get greedy. Take the profits and wait for another setup. And wait until you can build up your account and your confidence to a point where you can take larger trades. So we're coming up on the 6 o'clock hour, and I want to check in on a couple of things here and see if there's any significant news that came out during our show. We want to thank Madman for coming on. Really appreciate that. And what I'll do is just put on a couple more songs here, and we'll come back on the other side of 6 o'clock and wrap up the show. If you guys have any questions, feel free to let me know, and we'll be sure to address any of the questions if we can. You're listening to Briguy After Hours Show on daytradingradio.com. It's what you turn on when the markets turn off.